Good morning, trading world. It is March 18th, 2024, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: another volatile week ahead as the FOMC approaches. Yep, that's right. Another big week ahead as we wait on the FOMC announcement. We have a perfect storm brewing as we hit a downswing on the 4-hour time frame with plenty of downward momentum. We seem to take a break. We seem to want to take a break from the downward momentum briefly. Can we pop for 2 days leading into the FOMC announcement? If we do, does that change the trajectory on the 4-hour time frame just briefly, or does it actually reverse it and we get a bigger upswing? Those are the questions that we're looking for answers to. Now, it is definitely possible that today, in looking for the upswing leading into the FOMC announcement, it is definitely possible that today has a bullish bias to it. So we could definitely be looking for this pop-up or the beginnings of a pop-up. Also, look out for Nike being a signal over the next 2 days. Nike looks to be pushing up, but it looks to be a setup or push up into a continued short after earnings. So this could be a big signal in the market as well. Nike, a big component of retail, and we talked about those retail numbers, how consumer sentiment has to do or correlates with retail. So I will be looking at Nike as well, and it may be an opportunity to jump in on that continued short as well. I do have a bear bias projection for the week on the S&P 500 futures. The key level to watch for reversal is going to be between 52.18 and 52.23, with 51.67 being the key support to break. Actually, let me get us back over to the S&P futures. All right. The broader week is probably going to look a lot different than today. We're going to pop a decent bit in either direction, which is usually prone to happen at FOMC. You have a head fake move first, and then that shocker first, and then it kind of comes back to the median before taking off in the direction of the new trend. So actually, let's look at the week. All right, now we're looking at the 4-hour chart, and we're looking at the days of the week. We're probably looking at a continuation high with some drops throughout today, and overnight we're probably going to settle back down and pick back up on Tuesday, which is probably going to be more of a bullish range type setup, and Wednesday is going to be the day where everything kind of pops, and we're going to probably get that that shocker during the middle of the day where we get a decent drop down, pop back up, and that's probably going to take us into Thursday where we could see another, or that continuation down. We'll look for that continuation down on Thursday, and then coming into Friday down before a big possible pop back up, ending the week, even though I have a bearish bias on the week. That start to the week is at 51, what is it, 51.83. But somehow we could get change. That momentum could get thrown off by the FOMC report. Doesn't have to play out this way. We could end the week a lot differently. That Friday could be a big down day instead. So that opposite way of happening again, cruising up today, down, and we be more sideways going into the FOMC meet, and we could get that shocker down first, up, and it pushes us up going into Thursday. But Thursday we get that shock where the new trend starts to take hold, and we get that big down move on Friday. So this could be that beginning of a correction that's coming near. So that's pretty much how I see the week unfolding. Let's get back to today. As a matter of fact, let me bring up a 30-minute chart and bring up the intraday zones for today. All right, now that I have the zones up for today, let's go through them. All right, on the support side, we have our Jack support zone at 52.15, Queen support zone at 52.06, King support zone 51.91 all the way down to 51.81. On the resistance side, we have our Jack resistance at 52.45, Queen resistance zone at 52.54, and King resistance zone 52.69 all the way up to about 52.80. The important battle area or no man's land across today is going to be 52.15 all the way up to 52.45. In this no man's land, the more time we spend below 52.30, the more it speaks to a bearish reversal. The more time we spend above 52.30, the more likely we are to retrace higher into the previous range. On the other hand, if we pull back really low, the support battleground is between 51.81 and 51.52. 51.52. Now, in this battleground, 51.67 is going to be the line of demarcation. The more time we spend above 51.67, the more likely we are to push back up at some point. The more time we spend below 51.67, the more likely it is to push lower. Today we have reaction areas on both sides of the fence. Those reaction, that was an ugly R. Reaction areas are, the first one is 52.04. The next one is 52.09. And then 52.18. Next on the lower side is going to be 51.97. $51.86. And finally 51.67. I expect a hard fought battle to the upside, which means some stops and starts along the way, looking like many consecutive smaller candles marching up and fewer larger candles surprising down. We have reports today dropping at 8:30 a.m. and 10 a.m. the industrial product price and the housing market index, but these two shouldn't be market moving events. The scenarios that I'm looking at today, probably the most probable scenario is going to be a bullish biased range day, and that bullish biased range day let's see if we can get some shape out of the bullish biased range day. We're probably going to push up here or continue to push. Let's see where that first, we may get to this 52.18 and reverse pre-market, and it's going to take us down to a couple of stops where we may push all the way back down to that 51.97, possibly 51.86. These are the reaction areas that I'm going to be looking for entries. long entry signals, and so there may be where we get those signals, and then probably a push back down during the lunch period, but constantly fighting, trying to push up, and we may finally at some point past midday break that 52.30 for the day, giving us a bullish biased range day. And when I say bullish bias, I just really what I'm focused on is that we kind of set, or after looking at the day, you're going to see we set a couple higher lows and higher highs, closing closer to the positive side on the day. So that's what I'm looking for when I say bullish biased range day. It is a range. Remember, range day, we tend to go back and forth. The next probable scenario is going to be a trend up day. If we see a trend up day, it's highly likely because we've gapped up on the morning. Let's see where we left off at yesterday. It was 51.83. Yeah, so we have a pretty decent sized gap up. So that trend day could look something like this. We're on the report, we bounce, continue to bounce up, but run into that resistance somewhere between that 52.18 and 52.30. At the opening, we reverse back, trying to fill the gap, but somewhere along the lines we find support before completely filling the gap, and then we take off back to the upside. Again on the day, and lunchtime we run into our lunchtime chop, and after lunch we get our head fake down, and then at some point we continue, at some point after 2 o'clock we continue the trend from the morning. That is how a trend day would look. The last scenario is going to be a rounded reversal. Least probable scenario is going to be our rounded reversal day type, and if that happens, the way that is going to look, we're probably going to continue this strong push up into the open, and at some point don't really start to see real slowdown or that level off at the lunchtime chop. And the key thing to look for on the rounded reversal is whatever indicator or internal that you look at. Even though price action is making higher highs and higher lows, your RSI should be doing this. the whole time. And then eventually after lunch, we catch up to it. And you see something like that where we, just as hard as we ran up in the morning, we're going to run down just as hard in the afternoon portion of the session. So those are the 3 day types. First, most prevalent day type I'm looking for is going to be the bullish biased range day. Next probable is the trend day, and least probable is the rounded reversal. So that's what I'm looking for today. Always remember, your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position as well as the current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's make it a great one.